The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Alasdair Macleod, keeping you up to date with expert opinion on precious metals and the markets.
Hello, this is Alasdair Macleod on behalf of Gold Money, and with me, I'm delighted to say, I've got Chris Powell of the Gold Antitrust Action Committee. GATA, or GATA, as some might say, was founded, I think, in 1998 and has worked very, very hard to expose the manipulation of the gold price by central banks and bullion banks. Welcome to this podcast, Chris.
Delighted to be here, Alasdair.
Now, I find it interesting that you started off working as a journalist, and you're editor of is it the journal Enquirer in Manchester in Connecticut?
That's right.
How did you get involved in the gold business?
Oh, it was a complete accident, Alasdair. I was getting back in, I think, 1998. Some newsletters that I'd signed up for, investment newsletters. You send $20 in and they get you trial subscriptions to some financial letters. And one of the letters I got was Jim Blanchard's gold newsletter. And he was saying that gold had been beaten down pretty good, and he thought it couldn't go too much lower. And I'd heard somebody say buy low and sell high. So I started following his letter and started following the gold market, looking for contrarian investment opportunities. And I quickly bumped into Bill Murphy's internet site of gold and silver market commentary. And he was a former futures trader, and he was complaining about evidence that the gold and silver markets looked like they were being manipulated, interfered with. And after he did this for a few weeks, I got very tired of it, and I wrote him an email saying that there was a lot of circumstantial evidence to support what he was saying about market manipulation, but he was missing something, and that is if it was happening as he saw it, what was happening was violating the Sherman Act and the Clayton Act and 50 state antitrust acts here in the United States, with which I had a little familiarity because of my newspaper work. Our newspaper is independently owned, and we'd had to use antitrust law against some big chain-owned competitors who tried to prevent us from obtaining certain newspaper features. So I told Bill, look, this is very likely against antitrust law, and instead of just complaining about this, somebody should form a committee and hire some lawyers on a contingency basis and sue the bastards under antitrust law and collect triple damages if you win. And I told Bill if somebody wanted to form such a committee, I would pledge $500 to it. And he thought that was a good idea, and that's what we did.
Well, so and that was the birth of the Gold Antitrust Action Committee. Now,
yeah, we incorporated in January '99. It took us a year or two, Alasdair, before we realized that the price manipulation was not just your usual investment house scheming, that it was very much a Western central bank operation working through intermediaries, and in fact had been underway for decades, and all the history of it really was all written down in various places. It had just been forgotten and neglected.
So it was really a question of just pulling together all those threads in terms of evidence, because it's a bit of a will-o'-the-wisp, isn't it? It's very, very difficult. The central banks won't tell you anything. They never audit their accounts. You just sort of have to pick up little bits and pieces and try and make a picture. It's a very difficult thing to do.
Yeah, the documentation is out there. Certainly the history is out there. Things like the London Gold Pool and gold sales by the International Monetary Fund. But it took us 2 or 3 years before we started collecting some pretty incriminating official government records. It's just they were never all kept in one place. And as you say, the central banks are not very forthcoming. So it is a little bit like pulling teeth to get the information. But the information is out there now in our documentation file. It's official government records, and we've collected official statements by various central bankers. Anybody who wants to put it together can do so.
Right. And indeed, your site, the website, which is GATA.org, has an awful lot of information about this history. Now, when you first started pursuing this subject in 1999, I mean, that was pretty well the bottom of the market. We'd had a 20-year bear market pretty well, and central banks at that stage were leasing gold into the market, but they weren't really declaring that they were leasing it, were they?
No, and this really is the key, I think, to the whole suppression, this surreptitious involvement in the market by central banks. And I think it was pretty well exploded a few months ago when we got hold of a confidential report of the International Monetary Fund dated March 1999, in which the staff of the IMF reports to the IMF board that Western central banks are refusing to disclose their gold swaps and gold leases because the information is market sensitive and its disclosure would impair the surreptitious market interventions by Western central banks in the currency and gold markets. This is pretty much the definitive confession of Western central banking.
Yeah, I think that is pretty clear. It's a pity it doesn't seem I mean, I know that you make sure that this gets as much publicity as possible, but it's a pity that the mainstream press don't pick it up. I mean, do you find that the mainstream press are sympathetic to the subject, or are they in the establishment's pocket, or what's your feeling on that?
Oh, my feeling on that probably can't be expressed fully in words that can be used even on the internet. A few weeks ago, a writer for the London Telegraph, a paper that I greatly admire, Emma Simon, wrote a column saying that there was no evidence of manipulation in the gold market. Well, I wrote her an urgent email directing her to some of our key documents, including that IMF report, but much other stuff as well, sending her the links and saying, gee, she really had missed this stuff, and would she please look into it and follow up, and would she please acknowledge my note? Of course, I did not hear anything back. I sent copies of the note to a couple of writers at the Telegraph who I've been in touch with over the years, who have gotten back to me and who once or twice did mention gold market manipulation. I sent a note to the paper's editor asking for an acknowledgement and follow-up, and I wrote a third time to Emma Simon, and of course I can get no acknowledgement. This is a little bit extreme in her case, but I'd say most mainstream financial writers just will not touch this issue, and many of them will not acknowledge even the most cordial solicitation by email.
Yeah, I think that's difficult. Do you think that I'm just sort of wondering if that the mainstream press are just so disinterested in the subject, or do they sort of take the view, oh, it's another of those gold bugs sort of thing, and one's sort of tarred with that sort of attitude's not quite the right word, but does one get categorized, if you like, as being a sort of a lobby group, and therefore, and there's no interest in the subject at the moment, so who cares? I mean, is it just apathy, or are they? I mean, do the press actually? Do you find that they're just completely apathetic to the subject, and are they, or is it they're in the pocket, if you like, of the establishment in the broader sense, and are therefore keeping off the subject?
Well, for the most part, I'm speculating, but my impression is for the mainstream financial media, gold is a four-letter word, and it is probably the most politically incorrect subject that anyone can raise. Now, I think you're right that anybody who's interested in gold is probably got a bad reputation to begin with the mainstream financial press. But all I'm trying to do as a journalist is press basically freedom of information issues. I would like to think that if a journalist was told that it could be proved that central banks are secretly manipulating markets, he'd be interested in the story, whether it was gold or soybeans. But this is very difficult, and I can only speculate that the financial press is, very much in the pocket of the financial establishment. This does bother our chairman, Bill Murphy, very much, but I try to explain to him that you got to look at these publications. If you open the Wall Street Journal, you'll go through the first section, you'll find that every other page has an ad from J.P. Morgan Chase or Goldman Sachs or some big company like that. And Bill wants to know why GATA is not on the cover of the B section.
Yeah.
Well, we're not good for business.
I think no. I can certainly see that, and I suspect also that the financial press recruit their journalists from universities with degrees, and they've studied Keynesian economics and monetary economics, and so presumably there's a lack of sympathy, sort of, if you like, educated into them.
Absolutely. But, if central banks are rigging markets and doing generally dishonest things and lying, journalism should be interested in that, regardless of whether it fits in with anybody's economics or politics. Now, we have gotten a few successes. I mean, I went to Hong Kong 6 weeks ago, and I managed to get on Bernie Lowe's program on CNBC again from Hong Kong. And I think a year or so ago, we did get a couple of mentions in the Financial Times after enormous work trying to get their attention. We do rate these as great victories, but they are rare.
Yeah, no, I can certainly appreciate that. Where does the regulator, and in your case, I think we're talking about the CTFC, where do they stand in all this? Because with manipulation, and it is blatant in the sense that when you get a news event which is bad for paper money and good for gold, what happens? Paper money goes up as gold goes down. It's all sort of the behaviour is completely obverse to what it should be, which clearly indicates that there is a manipulation going on there. But what do the regulators say about this?
Well, in the United States, we've been very fortunate to have a member of the Commodity Futures Trading Commission, Bart Schulten, who arranged a few years ago for a hearing on the gold and silver markets, and really arranged for GATA's people, our chairman, Bill Murphy, and our then board member, Adrian Douglas, to speak at it and complain about manipulation and present some evidence. That was, I believe, in March 2010, and the market really changed after that point. Now, the CFTC has been conducting its joke of an investigation of the silver market for, I think, 4 years now, and of course, nothing is ever going to come from that. I don't think anything's ever going to come from the CFTC generally, but Schulten did make sure that we got a hearing and did publicize the cause. And if the CFTC cannot enforce position limits against Morgan Chase, because Morgan Chase is basically fronting for the U.S. government, I understand this. This is a government operation, and the CFTC is part of the government. I don't expect any law enforcement from the CFTC when the government has something at risk. But nevertheless, we did get a hearing before the CFTC, and we got a fair amount of publicity out of that. And a certain amount of really valuable information came out of that hearing. Jeff Christian of the Metals Consultancy CPM Group testified at that hearing sensationally about the leverage in the so-called physical gold market, and basically exposed that market as being pretty much a leveraged paper market. That testimony has had a lot of impact. So, of course, the CFTC is not going to act against a government operation, but thanks to Bart Schulten, some publicity was given to our complaint.
So, yes, and Jeff Christensen, I think he was talking about the London market, wasn't he?
Yes, yeah. The London physical market.
Yeah, absolutely, which deals in forwards and has enormous turnover. And I think I'm not quite sure what he meant when he said that, or implied that each ounce of gold produced 100 times its weight, as it were, in paper. But I could certainly understand that with fees, commissions, and all the rest of it. And the whole thing seems to me is driven by gold as collateral, and there's so many things you can do with it. And of course, if you have got the central banks behind you, then you probably expand your activities to an unhealthy degree. Would you think that was the implication of Christensen's testimony?
Well, I don't know if he would have been ready to say that the central banks are going to backstop any big short in the gold market. I would say that, but he certainly told the CFTC that there was enormous leverage in the market, and in fact, he wrote a paper about paper gold trading in the London market that GATA has posted on its internet site. But I think that's basically the situation here. The big bullion banks feel liberated to sell enormous amounts of gold into the market that they don't have, confident that Western central banks will, to use the polite term, provide liquidity in any short squeeze. And I think that's what happened with the announcement of the Bank of England's gold sales a decade ago.
Yeah, absolutely. Turning to more recent events, we had the severe knockdown in the gold and silver price in the middle of April, when apparently very large amounts of gold were offered on the market. Is there any indication as to who might have been? I mean, obviously the size implies it might well have been a central bank. It was certainly, we're talking about, I think, 400 tons, 500 tons, that sort of size I've heard mentioned.
Yeah, well, those were the estimates, anywhere between 100 tons to 400 tons at least of paper gold. Whoever it was had access to either a lot of gold or more likely infinite paper money. And whoever it was allowed to violate position limits on the New York Commodities Exchange. And whoever it was manifestly striving to knock the price down. Well, those are clues that help you establish the likely identity of the seller. And I'm sure for starters, it involved big bullion banks or a big bullion bank, and it very likely had the backing or instigation of a Western central bank or one, a number of Western central banks. And that knockdown on April 12th and the 15th, Alasdair, I think has given the game away. I think the central banks are so desperate in regard to gold and other markets, they could not care anymore about whether they were caught. And they were caught in April. Even people who have disparaged GATA's assertions for years began coming around at that point. People who did not accept the possibility of manipulation were shaking their heads in wonder and awe at who would smash the market this way. So I think there was a very big price to pay by the Western central banks for the gold smash in April. They gave themselves away.
Yes, key to this, I would have thought, in evidence from what you're saying, is the subject of position limits. Tell us a little bit about that. A position limit, presumably, is the maximum size that someone using the market, who presumably isn't a bullion bank making a market, can come in and actually hit the market with. Is that right? And what sort of size are we talking about?
Our friend Gene Ahrensberg of the Got Gold Report did some calculations of this attack in April. I think he found that the gold that hit the market was likely 14 times larger than what any one trader would have been allowed to put into the market if position limit rules were enforced. Now, there are exemptions to the position limit rules for what they call bona fide hedgers, but I think that's really niggling little little details. The fact is, nobody had ever dumped that much gold on the market all at once. It was an extraordinary event. It could have been perpetrated only by a central bank or by bullion banks operating at the instigation of central banks.
Right. Well, I think that's pretty clear. And lastly, Chris, how are you seeing sentiment in America at the moment over gold? I mean, you must be fairly close to people's opinions and so on. I mean, presumably there are lots of very disappointed bulls. Do you think the weak holders have all been shaken out? I mean, what's your sense on this?
Yeah, well, North America is probably has the weakest gold sentiment in the world anyway, just because this is the center of the paper money world over here. We are not aware, very sensitive, what's going on in India or China or the rest of Asia. So the sentiment over here is always pretty weak to begin with. I was at the Gold and Resources Conference in Vancouver last week, which was the worst attended Vancouver conference I've ever been to. That's pretty indicative. On the other hand, people who watch the market closely, I think, are expecting it to turn up from here just because of the various indicators they see, the technical indicators they see in the market, the change in the commitment of traders reports, where it seems that the big bullion banks have gotten out of most of their short positions and gone long, and the short positions now have been stuck with hedge funds and speculators and retail investors. So that's encouraging the gold crowd over here. They think the smart money has gone long. I don't know. I try not to get too enthusiastic about the prospects. I've always suspected that this issue is going to be resolved by an international currency revaluation that will include gold and mark gold up to a much higher price and allow central banks to recover their leased gold for a much higher paper price, and they will just begin another holding action against gold at, from a much higher price, a much more sustainable level.
Right. Oh, well, that is interesting. We'll keep our fingers crossed that we actually get that rather than a complete paper currency collapse. Anyway, Chris, thank you very much indeed for taking time out to talk to us. And our listeners can find you on GATA.org. Is that right?
That's right.
Lovely. Thank you very much.
Thank you, Alasdair.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.